The way I talk with my auditors about fraud is thinking about an intentional action or an intentional activity by someone to gain a personal advantage to the detriment of the organisation, so some kind of loss to the organisation. Our objective isn't to be the proof of fraud or the originator of the identification of fraud, but to provide an audit approach that allows an opportunity to identify material misstatements of the financial statements. I think of it really like a 4-step process. First one is pause and think. Understand the issue is the second one. Revise your audit approach and consider your breach reporting obligations. Pause and think first of all, and there's probably 2 elements to that. Who might be part of perpetrating the fraud? Who might be part of investigating the fraud? Make sure you're appropriately separating those such that when you pick up the phone to talk to them, you're talking to the right person who has the authority to do something about it. Another really important part of pause and think is really within your own firm. So if you're the staff member on the audit and you found out something, escalate it within your team. Don't rush into the client. So when you've had an opportunity to determine your protocols, you're going to need to understand the actual issue. I think of it as I'm going to need to understand this issue, scope and scale. When I refer to scope, it's about proportionality. Go back to ASA 240 and read it. There's some nuances in there that actually by rereading it when you've got a live example makes you go, oh yeah, there's some really great guidance in there. It could just help really point you in the right direction. With your hat of professional skepticism on, read the results of the investigation. Make sure that you have access to that information, of course. And then you start to build a picture then of how you should be responding on the audit. There are a few levers to pull. Materiality, you might want to reconsider materiality. It might not change your overall materiality, but your performance materiality for certain assertions or line items or significant accounts might change. 2 that maybe aren't the most obvious, but certainly I've found to be useful when talking with teams is the source of evidence. So you might need to do more work over the authenticity of certain sources, given that certain frauds are around falsification of invoicing or other information, so the sources of your evidence. Along that same lines, management judgments. So depending on the nature of the fraud, obviously, it might bring into question when management is representing to you certain things around judgments, estimates. Do you really trust now that you're going to rely on those management judgments and estimates in light of the fraud? Some more practical things, think about reissuing your engagement letter because you might be doing the scope or scale of your work or indeed an additional fee, and timelines. So for frauds found right around year end, you're about to go out to the audit, that can really change the timing of completion of the audit and indeed completion of the client's own due diligence around preparing their financial report. If you think it has something smelly or dodgy around it, start escalating it immediately within your team. It's the best response. It gives everyone comfort. You can work together. Professional skepticism comes with experience over time. So the more you escalate it to the person who might have dealt with this before, the better off you're going to be.